we work with Myntra, and these all are licensed brand. Uh, the major brand what we do is Roadster. It's a
Right.
casual wear brand.
Mm.
Then we do Must and Harbor, Ether, Invictus, Harvard, Sangaria, and Anook. So we do 7, 8 brands with Myntra.
Mm. Mm.
In these all brands, Roadster is the top selling brand. We are very much positive about our brand, our business model, our supply chain partnership with Myntra, and I
Mm.
can only say that we are very good into it.
Welcome to Sunday Investing, to our Know Your Promoter series. We have Mr. Pankaj, one of the promoters of Fractal Industries. The company's SME IPO is opening on the 16th of Feb and closing on the 18th of Feb. Welcome, Pankaj, and thank you for making the time. Maybe we'll start right at the top. Maybe you can tell us a little bit about yourself, as well as how the idea for what you're doing with Fractal Industries. How did that come about? I think you have a background in apparel manufacturing as well. So can you just tell us a little bit about yourself and how that journey led to starting Fractal Industries?
Okay, I'm Pankaj Agrawal, Managing Director of Fractal Industries Limited. So I will take you to the journey how Fractal is made and how what Fractal does. So Fractal Industries is a technology-enabled end-to-end supply chain apparel manufacturing company focused on Indian e-commerce fashion industry. So the company Fractal came up with the name Fractal Fashion. It started in 2003, and we have started with the manufacturing unit. After that, we have done FOB orders and exports for a lot of domestic and export brand. In 2014, we have started e-commerce business with Myntra, and earlier the business was like outlet, but slowly and simultaneously we have uh, driven this business to marketplace, and till date we are doing on marketplace model. So this is the small introduction what we do and how we do and what we have how we created Fractal.
Understood.
Yeah.
Uh, so can you tell a little bit more about a couple of words that you mentioned? You spoke something about outright model, about the marketplace model. I think the RHP mentions a PPMP model. So can you just tell us what it is exactly that Fractal Industries does? What are the different business models? I know that the business models have evolved also over time. So can you just take our listeners through that journey?
Yeah, the outlet model is like Myntra give a purchase order to us and we supply to them. Their fabric and accessories are nominated by Myntra. We are the investor to convert the goods, and in that model of business, the margins are very less, like 7 to 8%. And once we deliver to Myntra, Myntra give us the payment. So there is no inventory outstanding with us. But in case of PPMP model, here all the investment, everything is done by us. Myntra charges only the commission and royalty, balance everything from designing, styling, procurement of fabric, manufacturing, warehousing, fulfillment, dispatches. This everything is taken care by us. So this here, though the investment is done by us, so the margins are pretty better than outlet. Here we make nearly 20 to 22% margin.
Hmm.
So this is the difference between outlet and PPMP. We also do uh, our own brand in name of 789, which we have
Hmm.
recently launched.
Hmm. Understood. So can you tell us today, most of your business used to be outright and now most of it is this PPMP, this marketplace model. Is that correct?
Yeah, earlier we used to do outright 100%, but
Hmm.
in 2024 there was a transition from outright to PPMP, and in 2025 we have done 93% PPMP and 7% outright only.
Got it. So you use today you're using outright more as a way to fulfill some extra orders as opposed to your core business. So your core business now is servicing where you take the full inventory risk and you sort of run the brand on a third party platform like Myntra. That's correct.
Yes, true.
Okay, perfect. So can you tell us a little bit more about now your relationship with Myntra? what are the brands you work with that are under the Myntra umbrella? How big is Myntra for you? Can you just help our listeners understand that?
Basically, there are multiple brands we work with Myntra, and these all are licensed brand. Uh, the major brand what we do is Roadster. It's a
Right.
casual wear brand.
Mm.
Then we do Must and Harbor, Ether, Invictus, Harvard, Sangaria, and Anook. So we do 7 8 brands with Myntra.
Mm. Mm.
In these all brands, Roadster is the top selling brand.
Got it. And if I'm not mistaken, Roadster is one of the fastest moving brands for Myntra also overall, in their overall marketplace.
True. In Myntra, I think Roadster drives nearly 70% of the total sales.
Wow. Okay. And are you the only manufacturer of Roadster? Does Myntra also manufacture it, or do you have other marketplace vendors who you compete with who also manufacture Roadster?
Yeah, there are many marketplace vendors because Myntra is having altogether some uh, 30 brands, and they are having nearly 300 vendors like me. But
Okay.
each and every vendors are having different, style license. Everyone
Hmm.
cannot make what I am doing, and I cannot do what others are doing. So that is the differentiation Myntra has created. So the clash
Okay.
of the same product is not must not be there, and there must not be risk to inventory to the seller.
Understood. So
And
it
Myntra
this.
themselves
Yeah.
also produce the goods is still what we are supplying in outlet, but they are buying
Hmm.
outlet from other vendors too. We are not supplying at the moment, apart from 4 5%, which Myntra needs on urgent basis. But other vendors is still supplying to Myntra.
Got it on an outright basis. Understood.
Yeah.
How big is Myntra for you guys as part of your overall revenue, and are you doing anything to reduce that concentration risk?
See, basically, right now, whatever we are doing for Myntra is like you can say it like 99%. Mitigate the risk, we have 1% Agio, Buddha Jeans, and recently
Hmm.
we have signed the agreement with Amazon in the brand called Incast. So in
Okay.
February, we are going to launch Incast at Amazon,
Okay.
and that is also a marketplace itself where the risk inventory is of Fractal, and platform will take only commission and royalty.
Understood. So you are obviously heavily concentrated with Myntra, but the expectation is that over the next few months you should be able to de-risk with this Agio and Amazon relationship and so on.
Yeah.
Okay, perfect. Okay, can you tell me a little bit now about your manufacturing facilities? How large is the facility? What kind of capacity you have? Uh, do you do everything in house? Do you also outsource any manufacturing? Can you just walk us through that?
See, right now we sell nearly 10,000 garments approximately every day, which is like 300,000 pieces every month. So we have our own capacity in Mumbai, and there we produce nearly 15 to 20% of the total uh, garments what we make on monthly basis. So balance 80% capacity we get converted from the outsourced factory. We have 10 tire factories based out of Karnataka and Vapi. So these factories, whoever are doing for us, those factories are doing 100% for us. They can't do for any other, you know, buyers. So it's like a contract between me and factory for 5 years that they can serve only to us, and we also take care of factory that their production loss or cash flow must not go bad.
Okay, understood. Understood. And now this is a kind of business which is seasonal. Like, do you, because you said you manufacture about 10,000 a day, there'll obviously be spikes during, say, when Myntra will do its big billion day sale or whatever. I don't know what it is called, or they may have these end of season sale and so on. So then how do you manage that seasonality, from a capacity standpoint?
See what happens. There are two seasons for Myntra. First is like summer, and next is winter. Though we are into shirts category, mostly shirts and trousers. So winter wear is quite dull for us. I can say from 15th November to 15th Jan. So in December, what happens? Myntra come up with end of season sale, where Myntra give lot of discount. They give up the commission. They give up, logistic. So all these things coming, bringing the product to at very low level uh, price, and the customers are getting benefited. So if winter is slow, then the sales are getting covered from the sale season. So I can say that there is no big challenge if something is selling at the rate of sales of 100 pieces a day.
Hmm.
So up to 10 months there is no challenge. 10 months it keep the same race and pace. But if in winter the sales go slow, Myntra come up with the sales,
Hmm.
end of season sale, or they come up with big billion day. They come with Myntra
Got
birthday
it.
bash. So there are total four type of HRD sales which Myntra
Hmm.
gives, and
Hmm.
whatever like block stock or whatever less sales happens, they get covered from there.
Understood. Understood. So these are very spiky, but it's manageable in your from your
Yeah, it's
experience.
manageable.
Understood.
Correct.
So can you tell us a little bit now about how the working capital works for this segment and for your business? How many days of inventory do you guys typically keep? What is the typical working capital cycle? How fast do you rotate your funds?
So right now, this business is working capital intensity. Total working capital cycle is say about 6 to 7 months, where 3 months goes for like procurement, like fabric purchase, then conversion with factory, then inwarding at warehouses, and another 3 months goes for sales of the product. Like 1% of the total inventory gets sold out every day. So to sell a product, you have to invest like 100 days for 100% inventory liquidation. So total cycle is like of 6 to 7 months.
Okay, and is that a market benchmark? Do you think you're better than peers, or do you think there is scope for improvement? Because 6 to 7 months
I
is quite
think,
a heavy cycle. Yeah.
yeah, I think we are better in this, because what happens, we are like driving 80% of the repeat order and 20% of the fashion order. So when once fashion came into picture, it even don't sell like 0.5% a day. So in that case, some good drivers take over it in best sellers. So those will sell like 2% a day. So I'm telling about average sale is like 1% of the total inventory.
Understood. Understood. So what is it that is your secret sauce that keeps Myntra coming back to you, year after year? You've had a long relationship, almost 10, 12 years now with Myntra. You're now expanding to other partners. But what is it that is keeping Myntra with you? What is it that they like about what you do that others are not able to do?
See, first thing is like our 22 years experience in this industry, and we have like supply chain infrastructure. Uh, when we are doing order also, that time we are having a warehouse where we keep the goods of Mantra and dispatch it to direct to customers. What Mantra get the orders. So whatever we are doing is not new for us. We have already done the supply chain business with Mantra at the time where when we are doing outlet orders too. So that is the main key thing why we are with Mantra and why Mantra like us, that we fulfill the quality, we follow US AQL standard, we are having infrastructure, we are having tire factories, we are having our own factory, we are having return warehousing. Uh, these all are the key things like where we are leading from other vendors.
Understood. Understood. Okay, so let's just come a little bit to the numbers. I think the first thing that people will see when they look at your RHP is that there is a huge variation, between FY23, FY24, and FY25, where there was a big dip in FY24. So can you just help people understand what that was? Is that one time in nature, and going forward, will things be smooth?
See, as far as the numbers are concerned, first thing, the dip in 24, because that was the transition phase. We are converting ourselves from outlet to PPMP. So partial business was outlet and partial business was PPMP. Even for outlet also, though we are handling the inventory, Mantra inventory, so we have to have to return back the inventory and invert our own newly made inventory in our warehouses. So in that case, every day we are able to dispatch like 10,000 pieces. So we are holding inventory of Myntra of 7 lakh pieces that time. So all the inventories are getting returned to Myntra and new inventories are getting inverted. So that transition phase took 4 5 months time, and thus the sale in 2024 dropped, which was immediately picked up in 2025 with marketplace inventory. So that, so if you see the number of
Hmm.
2025, so the margins are good. So numbers, EBITDA and PAT, everything is increased.
Got it. So so as per you, that was a kind of one-time transition because you were moving
Yeah,
from that model to this model. I think your margins overall have continued to improve, and if you see bottom line, that is constantly growing. So this is more of a one-time impact on the top line more than anything.
yeah,
Correct?
definitely.
Understood. Okay. And how do you see this going forward? What is FI? Most of FI26 is almost done now. How do you see FI26, FI27 shaping up? Without giving very specific numbers, what kind of growth do you see going forward?
See, for March closing will be close to like 100 crores. For the coming financial year will be like 150 crores we are targeting. And
Okay.
year on year, we are targeting like 30 to 35% growth.
Like going forward. Okay, that's good. I mean, that is a good growth to target. And what about margins? I think your margins obviously have changed a lot with the change in model. Do you see like what is a good sort of steady state margin that you think that you guys can maintain?
See, when we are on outright model, that time margin was 7 to 8%.
Yeah.
When we
Mhm.
converted ourselves into PPMP model, the
Mhm.
margins are like 20 to 22%.
Okay.
And though we are building our brand, and once we scale up our brand, then our margin will grow up to 25%.
Got it. Can you tell us a little bit more about the brand? You mentioned it briefly. You said it's called 789. So what is the, who does that brand serve? What is the target audience for that brand? Have you had any initial sort of feedback and success with that product so far?
Yeah, 789 is our new brand, which we have introduced in January. And though this brand has not come out with the sales yet, but we have given a presentation at Myntra also for this brand. So this brand Myntra has liked and done the co-branding with a brand called Mr. Bowerbird.
Okay.
So in February, we are going to launch this brand at Myntra with co-branding under Bowerbird. And apart from that, we will be selling it from our own website. So once Myntra co-branding is done, our
Hmm.
visibility and scale will increase at Myntra platform, and
Hmm.
whoever are Bowerbird customers, they will definitely buy this brand from Myntra. So this is all about 789, and I feel that in this financial year, coming financial year, we will be able to scale or hedge nearly 15 to 20 crore rupees sale from this brand.
Good. So that will be a good diversification, I think, from Roadster and from the core Myntra piece if you are able to start showing revenues from your own brand.
Yeah.
Understood, Pankajji. Thank you so much for this. Can I ask you to share, one set of final word or something that you would like to tell your future shareholders who will be listening to this video?
See, we are very much positive about our brand, our business model, our supply chain partnership with Myntra, and I
Hmm.
can only say that we are very good into it. And I love if someone monitor closely to my company, definitely they will be getting benefited. Once they invest, they will definitely see the result in coming future.
Fantastic, fantastic, Pankajji. With that, we'll wrap up this interview. Just to
Yeah.
recap, we had Pankajji from Fractal Industries. The IPO is opening on the 16th of February and closing on the 18th of February. Thank you so much for your time, Pankajji, and wishing you the best of luck for the IPO and your journey as a listed company.
Thank you very much.